Hi friends! A US government shutdown is once again on the horizon, and everyone is asking the same question. How will this affect crypto? Is it time to dump positions now? Is this the end of the bull cycle, or just another round of scary headlines that will soon be forgotten? Some analysts warn that a shutdown could hit the economy and push investors out of risk assets. Others say it's just noise, and that crypto has already learned how to weather these kinds of scare stories. So let's break it down. Subscribe, hit the like button, and let's go. Friends, before we move on to the market overview and then to promising coins, please note that this video is not financial advice. It only reflects my own impressions and market view. Always do your own research and invest wisely. Let's break down what a shutdown actually is and why it's making so much noise. Essentially, it's the moment when the US government fails to fund its agencies. At that point, part of the government halts operations, hundreds of thousands of employees are sent on forced leave or work without pay, and the economy feels the effects of a short-term pause. The deadline right now is October 1st, and markets are already pricing in scenarios ahead of that date. US indices are swinging nervously, Europe is watching Washington, and gold has shot up past $3,800 as investors seek safety. Classic risk-off in anticipation of political turbulence. What are the short-term consequences? The biggest one is delayed macro data. Imagine, we're used to relying on NFP, CPI, PCE, and now those reports may simply not be published on time. The Fed, traders, analysts, everyone starts moving blind. Any comment from an official or rumor from the market suddenly shakes sentiment. Is a shutdown really that likely? Prediction markets have put the probability between 70 to 80%. On Monday, it was around 82%. That means the market is already preparing for a shutdown as a real scenario, not just a fantasy. And you can see this in betting volumes, which have been climbing hour by hour. Now, a bit of history. Moody's notes that a short shutdown could shave around 0.3% off US GDP for the period it lasts. If it drags on, the effect grows. Business and consumer confidence drops, spending slows, and the economy starts stalling. But interestingly, stocks often digest these episodes fairly quickly. The S&P, 3 to 6 months after the government reopens, has usually shown positive returns. How does this hit crypto? Everything overlaps here. First, the dollar and bond yields are rising, and that automatically pressures risk assets, with crypto the most sensitive. Second, the revised GDP growth strengthened doubts that the Fed will cut rates quickly. In other words, cheap money may not be coming soon. Third, crypto always has the leverage factor. Overuse of leverage can trigger cascades of liquidations and amplify price pressure. What to watch next? A few focal points. Will lawmakers strike a deal before the deadline, even a temporary resolution? That would immediately calm things down and support risk on. Will NFP and inflation data be delayed? If yes, markets will trade on rumors. How are gold, the dollar, and yields behaving? If the dollar keeps rising, it will be tough for crypto to recover. And of course, keep an eye on Fed watch probabilities. Any shift there makes risk assets react instantly. So, friends, the shutdown situation really is making markets nervous. Risks include delayed macro data, heightened volatility, and a risk-off backdrop. And this can't be ignored, but history shows that such pauses rarely become long-term catastrophes. Yes, investors panic in the moment, but within a few months, markets usually recover. Some even post solid gains. For crypto, this means as long as the dollar and yields stay high, recovery will be difficult. But on the other hand, it's in moments like these that new demand is born. Investors look for alternatives, and gold isn't the only place capital can flow. Bitcoin is increasingly called digital gold, and every crisis like this only strengthens that narrative. And one more thing. Despite overall pressure, there are always stories in crypto that break out against the negative background. So don't be too quick to write off the market just because of the shutdown. History proves these are more like temporary hurdles than the end of the game. And before we jump into the crypto market overview, make sure you subscribe so you won't miss the next important videos. Friends, the key right now is not to lose your head. Yes, the shutdown is adding pressure, markets are swinging, and the feed is full of scary stories. But remember, panic has never helped anyone make money. What matters is understanding what's happening and keeping your finger on the pulse. That's why it's so important to track the key indicators. They give us a picture of the market even when the news is shouting the opposite. And right now, there are several main signals we can rely on. After that, I'll show you my market outlook and Bitcoin price forecast. But first, subscribe to my Telegram channel, where I share twice as much market insight. So let's go through the indicators. The first is DXY, the US dollar index. When the dollar rises, the world flips into risk-off mode. Investors flee risk assets into safer ones. That's when Bitcoin and altcoins feel the heaviest pressure. But once the dollar loosens its grip, the market immediately breathes easier. Every DXY move right now is like a red or green light for crypto. The second indicator, US Treasury yields, especially the 10-year and 2-year. They're the cost of money over time. When yields rise, capital becomes more expensive and risk assets get squeezed. We've seen it these past weeks. As soon as yields climb, tech stocks fall and crypto follows. If yields drop, risk appetite returns. The third signal? Gold, the eternal safe haven. Its moves always show how nervous investors are. Right now, gold has shot past $3,800, a clear sign the market is looking for protection. But here's the twist. When gold rises alongside Bitcoin, it signals a shift. Crypto is more and more being seen as digital gold. Fourth, Fed rate futures, the CME FedWatch. They show what the market is really pricing for the next Fed meeting. If expectations for cuts weaken, investors trim risk. If they strengthen, traders see room for growth, and crypto gets support. In essence, it's the market's collective fears and hopes expressed in numbers. Fifth, ETF and ETP flows. Before, we mainly looked at on-chain data. Now, daily Bitcoin ETF inflows have become the new barometer of institutional sentiment. Steady inflows mean big money is ready to hold risk. Outflows, and the market starts to worry. And last but not least, open interest and volumes in crypto. This is the heartbeat of the market. If open interest rises with price, it's a healthy move, confirming demand. But if open interest stalls while price falls, expect a wave of liquidations. That's exactly what we saw recently, cascading liquidations that deepened the drop. So friends, these indicators are like a cockpit dashboard. If you only look out the window at bad weather, it's easy to panic. But when you know what your instruments show, you stay calm, keep your course, and understand where the market is heading. Now, let's move on to Bitcoin itself. BTC is showing a V-shaped rebound from the 109,000 to 110,000 zone and has already consolidated above 112,000. This has created a local base, but the market is still trapped in the 111.5 thousand to 116,000 range. That sideways channel will be key for the next 1 to 2 weeks. On the downside, support holds at 111.5 thousand to 112,000 and deeper at 109,000. On the upside, strong resistance sits around 115.5 thousand to 116,000. A breakout here could open the road for another plus 3 to 5,000 move upward. Bottom line, BTC is in the 111.5 thousand to 116,000 range, and the next 1 to 2 weeks will decide whether we push to 120,000 or drop back to retest 107,000. And that's it for today. Remember, these are just my personal thoughts on the market, not financial advice. Always do your own research before investing. Thanks for watching. Don't forget to subscribe, like, and stay tuned for the next coin reviews. See you soon.